Good morning, everyone. Good morning, everyone. Today is June 16th, 2025, and it is Monday. And here we are for our Monday morning touch point where we get to look at the single best leading market indicator available for the entire Austin market area. That is where we take the number of new listings plus the back on the market, and then we compare that with the number of properties that are active under contract and pending. And that's going to give us the level of absorption within the Austin market. We're also going to take a look at inventory levels and what's happening with active inventory, pending listings, and really what the overall market is looking like. Take a look at some of the economic forecasts that we can expect this week and how that may affect the bond market and therefore how it may affect interest rates, and take a look at what's happening with interest rates right now. You can see behind me that the bond market is up a little bit, right around the 1.1 basis points. But there's a lot going on this week. This is the week that the FOMC, the Federal Open Market Committee, is meeting. So there's a lot going on this week that could very well affect interest rates, in addition to all of the geopolitical events that are happening around the entire world. And how in the world is that affecting interest rates, and how could that affect interest rates? So it's going to be a very important week for the bond market, important week for real estate. Well, let's go ahead and start by updating the new listing to pending ratio. We do a weekly snapshot, and then we do the month-to-date figure, and we compare it with some of the previous weeks so that we can understand exactly what is happening with inventory. And is inventory expanding? Is it contracting? Let's go ahead and start by updating the previous week. At 11:59 on Monday, all of the figures, new listings, price increase, price drop, back on the market, active under contract, it all locks in. But pendings will keep on, we'll be able to keep on updating those pendings for the next few weeks because agents are allowed to update pendings for a few weeks. And that's why it takes us a little bit of time to get the final figures. It's usually 6 weeks is how long it takes for us to get the final figures on the pending. But 90% of the changes are done within a 14-day period. But let's go ahead and just start updating all of that. Keep in mind that all of these resources, this information that we are updating, is going to be for the 6-county area. That's going to be for Travis, Williamson, Bastrop, Hayes, and Caldwell County. I'm going to go backwards in time a little bit and take a look at the pending. This is going to be from the 2nd to the 9th, and that stays steady at 404. Let's go ahead and go from the 26th to the 2nd, and that's going to be 504. That stays the same because I updated this morning. I just want to verify. 513, that stays the same. 576, let's go back just a few weeks. 556, I'm going to go back 2 more weeks just to make sure it's all perfect. 638, and now from the 21st to the 28th of April, 590. So everything is updated. So let's go backwards in time a little bit. 2 weeks ago, 1,375 new listings. Let's fast forward to the ratio. That ratio 2 weeks ago at a 0.58. That's going to go up a little bit, but not by much. It's going to settle somewhere around the 0.62 to 0.65. And that does put us in that substantial increase in inventory. Let's start updating this week from the 9th all the way through right now as we speak. Keep in mind that tomorrow morning, we're going to have the updated new listing to pending ratio, and that will have the final figures for new price increase, price drop, active under contract, and that'll be the final figures. It'll never, ever change. And of course, pending, it'll change for the next few weeks. We are right now at 1,163 new listings. Let's take a look at price increase. We're at 139. That is a pretty substantial drop from a week ago or 2 weeks ago at 205. We're at 139. Let's take a look at price decreases to 115. That ratio between price increase and price decrease is at 94%. A little bit higher than the previous week, but we've been hitting some 94%ers here over the past few weeks. And statistically, that is very high. That means that out of anything that could have gone up in price or down in price, 94% went down in price. So we are noticing a lot of pricing pressure on the available inventory. A lot of price decreases going on right now. I believe the number is right around 54.3% of all the active listings have had a price drop over 50%. So people are now chasing the market down. A lot of pressure on pricing. Let us take a look at back on the market, and that number is at 238. A little bit of a high number. There you go, 20% back on the market. That's going to be the highest going all the way back to January. That's a high figure, 20% back on the market. Let's take a look at active under contract. We're at 423. And now this is where you get to guess. I need 5 guesses on how many pendings do you think, and this is going from June 9th all the way to right now. How many pendings do you think? Let's go ahead and get 5 guesses going. Melanie Price is going to start us off at 204, followed by Harold at 210. Let's just get a few more pendings. How many pendings? How many pendings? We've got 204, 210. How many pendings? 204, 210. We've got Charmaine at 195. 3 down, 2 to go. Let's go ahead and get 2 more guesses going, and I'll be able to click on that little button that'll give me the number of pendings, and we can update this entire resource and then go into the monthly. We've got Violet at 222. So we've got 204, 210, 195, 222, slightly more bullish 222. And let's go ahead and just do one more guess on the number of pendings, and I'll be able to click. We always go for 5, and let's take a look at it here. We've got 205. Rowan, thank you, Rowan, at 205. Let's go ahead and just click on this button, and we are at, well, okay, well, this is not bad. I'm actually very encouraged by this number. Didn't quite reach the high of Violet's 222, but 219 pendings. Melanie Price said, this indicates how we feel about the current state of the market. That's a very good point, Melanie. Like, we're all in the low 2s and we got really close. We're getting really close at guessing what is happening with the market. That does put us at a 0.46 ratio starting the week, which means we're going to end once again right around that 0.6. What that means is that out of 1,000 listings that are entering the market, we can expect 600 to be absorbed by the market. That's what that means. What's the leftover? The leftover gets added into inventory. So when the ratio is under 1, that means that inventory is increasing. The level of absorption is less than the level of new listings entering the market. When the ratio is under that 0.6, we're going to call that a substantial increase in inventory between 0.6 and 0.75. It's a tangible increase in inventory. When the ratio gets closer to that 0.5, that means that only 1 out of every 2 properties entering the market, we can expect that to be absorbed by the market. And that's when inventory explodes. You can really just call that just a stalled market, borderline a dead market. Inventory takes off. We are starting the week at 0.46 as we revisit this number 4 weeks from now, as we're updating the pendings. Keep in mind, new price increase, price drop back in the market, active under contract. It's going to lock at 11:59 p.m. tonight. Pending, we'll keep on updating that number. But starting the week at a 0.46 means that we're going to end at about that 0.65, between 0.62 to 0.65. And that does put us on that substantial increase in inventory. We can expect the number of active listings to go up. Now, there is a seasonality to real estate. It is June 16th right now. As we cross into July, August, September timeframe, the withdrawals and expired start going up. So inventory starts backtracking, even though the ratio stays at a stalled 0.6, 0.7. The number of active listings will pull back, not because demand is increasing, but because the available inventory is being withdrawn or it's expiring. So that is one thing to keep in mind. But the reason why I like to use the ratio of only active to pending is that even though the number of active listings will go down, seasonality of real estate, that does not mean a recovering market when we're looking at the level of absorption between active and pending. So that is one thing to keep in mind, because I have seen headlines out there saying the market is improving because we had 15,000 listings in July and now we've got 12,000. Well, it's improving if the new listing to pending ratio is now over 1. But if the new listing to pending ratio is still really low, then what is causing the drop of active listings? Not higher demand, but sellers simply taking their homes off the market. And we know that more than likely they're going to relist within a 6-month period. So all we're doing is just kicking that inventory to a following year. That's what's going on. And that's why we track specifically the new listing to pending ratio. 3,156 open houses were held over the past 7 days. Let's go ahead and start updating, or let's compare this same week year over year. We are down 88 listings. We are going to make that up between now and 11:59 p.m. We only have 88 listings to add today. We are going to be on the positive when you look at this information at the end of the really beginning of the day tomorrow. When we update this information first thing tomorrow morning, this is going to be on the positive. We've had 7 more price increases, 182 more price decreases, 32 more back on the market. But take a look at the pending. So we've been positive except for 1 week where we just had 42 less new listings. That was back in April. We've been very much on the positive on new listings, but we have been negative on the pendings. We've got a question. Can we talk about withdrawing without the listing agreement terminating? Yeah, absolutely. So when you take a look at the listing agreement and you want to amend the listing agreement, there are a few options. The seller can instruct you to cease marketing or hold off on marketing the property, or which means you still have a listing agreement in place. You are still the fiduciary for that seller, but you receive the instruction to cease marketing. That's one option that the seller has. The other option is to completely terminate the listing. So what you want to do, it's the difference between amending the listing as opposed to terminating the listing. That's going to be the two. Now, if the seller wants to remove the property from the MLS for a period of time, they just want to remove it, then you don't want to use the termination of listing, because the termination of listing terminates your listing agreement. You want to use the amendment to listing. You want to use section E, E as in echo. In that section, section E is where the seller's saying, I still want you to be my agent. You're still my agent, but we're going to cease marketing for a period of time, whether that's 10 days, 20 days, 30 days, whatever the case might be. In that case, then we still withdraw the property from the MLS. It cannot be relisted for 30 days. That is an MLS rule. An agent broker cannot withdraw the property and then relist it 2 days later to reset the active days on the market. It has to be at least 30 days. That is when the active days on the market gets reset. The cumulative days on the market will not be reset until the 91st day. So it's 90 days. You list it for another 1 more day. Then it resets both the active days on the market and the cumulative days on the market. But don't do the termination of listing if you still want to represent that client, or if that client still wants you to represent them. You're going to do E, E as in echo, on the amendment to listing, which is 1404. TXR 1404 is going to be the amendment to listing. So does that answer your question? Does that address your concern? Okay, good stuff. Good stuff. Now, let's keep on going. So there's the update. This same week last year, we were at a 0.75 ratio. We are starting this week at a 0.46. The previous week, we were at a 0.58. The same week last year, we were at a 0.75. So we can see that when we look at the same week and we compare it year over year, we are slower than we were last year. The ratio never, ever lies. Let's take a look at the monthly data. What we're going to do is go backwards in time a little bit. I'm going to go for month of May and take a look at the pending, and we are at 1993. So let's go ahead and update this 1993. Let's take a look at the month of April, and that's going to be 2118. Let's go back and take a look at March, see what's going on in March. That's going to be 2121. Perfect. That doesn't change. Now, I want to update the sold because the sold is also a number that could very well change after the month resets. That stays the same. That doesn't change. Let's go to April and see if that changes. That's going to be 26. And let's go to March, and that's going to be 29. Oh, so that changes. Okay, so that's March. And let's make sure we've got 6-county area, residential. Yeah, that actually changes. Yeah, we'll take a look. Give me 1 second so I can pull this up here. This is going to be for the month of March for the 6-county area. And let's see what's going on for the month of March. That is going to be 2624. Perfect. That doesn't change. Okay, so we're good on that. Let's start updating now the number of new listings so far for the entire month, because we want to see what is the ratio so far for the entire month. Number of new listings so far, we're at 2,457. Price increase, we are at 318. Price decrease, we're at 4462. Back on the market, we're at 435. Active under contract, 982. Pending so far this entire month. Wow. Okay, you all, we're at a 0.55 right now for the entire month, and it is 16 days into the month. We're at a 0.55 ratio. Let's take a look at sold. 1,045. Withdrawn. 500 so far this month. We're 16 days into the month, and we've had 500 properties withdraw. Expired. 176. So we're at a 0.55 ratio, and we can see just how much it has slowed down over the past few months. 0.55, and we are 16 days into the month. What does that mean? Well, when the month closes out at a 0.55, that means we're going to have a repeat of May. May at a 0.61. We're going to have a few more pendings that'll get updated. Agents are really bad when it comes to updating pendings, especially builders, new construction. So this number will go up a little bit into the 0.62, 0.63. We're going to have a repeat of that. Last June, we had a 0.71 ratio. This June, when it's all said and done, when we look at this information 2 months from now, a month from now, 30, 60 days from now, we can expect about a 0.61, 0.62 ratio. That does put us on that solid, substantial increase in inventory. So in saying that, let me go ahead and just save this. Keep in mind that you can access the updated information in Insight and Statistics. You can scroll down, you can click on New Listing to Pending Ratio, and then you can take a look at the comparison for everything. How many closings year to date, the cumulative closings. You can take a look at all of these resources. We'll do an overview on Wednesday during our training, broker Q&A. But what I want to do right now is take a look at inventory and just spend a good bit of time understanding what the activity index, months of inventory, what are things looking like, and then we're going to take a look at the bond market. We just hit a new record high on the number of active listings currently on the market. We're at 17,750 active listings on the market. So let's take a look at the year over year. We are up 18.1% year over year on the number of active listings. When you look at the breakdown on the number of active listings, out of the 17,750, 23.5% are new construction, 4,177. 76.5% are resale, 13,573. Now, when you look at the pending side of things, even though 23.5% of the inventory is new construction, it accounts for 38.9% of all the pending. On the resale side of things, 2,856 are resale on the pending side of things. So the activity index on new construction continues to outperform the activity index on resale almost by a factor of 2. The activity index pending divided by active plus pending on resale, 17.38%, tilting towards the cool side of the market. 30.33% on new construction, far outperforming the resale market. When you look at special listing condition, we do have bordering on a record high number of short sale at 47 short sale. And the activity index on short sale is now under 30%. It was over 30% for a few weeks. Now it's under 30%. You can take a look at the leading and the lagging indicators. As the leading indicator, which is the activity index, which is now at a low, as that leading indicator goes down, the lagging indicator, which is going to be months of inventory, goes up. And we can see that months of inventory is now at 6.32. Pending listings, we are down 4% year over year on pending listings. And let's take a look at activity index. We're at 20.8%. This same day last year, this exact day last year, we were at 24.5. So we are down 14.8% year over year on the activity index. Months of inventory, we're at 6.32 months of inventory. We are just going towards that 7-month of inventory mark. We could very well reach 7 months of inventory in the next 30 to 45 days. A lot of it is going to depend on how many properties are withdrawn from the market by sellers that feel like they missed the selling season. That's going to be what's going to hold us back from reaching 7 months of inventory across the entire market. But if we have the same number of withdrawals as we did last year, we ought to reach 7 months of inventory, officially being in a buyer's market, something that we have not been in a fairly long time. As a matter of fact, let's go ahead and just take a look. When was the last time we were in a buyer's market? Last time we were in a buyer's market, an official buyer's market, was October of 2010. October of 2010, we were at 7.4 months of inventory. That was the last time we were in a buyer's market. And we could very well be in a buyer's market in the next 30 to 45 days. When you take a look at the number of pending properties, if something doesn't go pending, it doesn't sell. And when you take a look at the number of new listings entering the market, the activity index, the forecast, I mean, take a look at this. We went from 6.1 to close to 6.5 right there. We're at 6.3 when you look at the actual number of listings. What I do in this graph is I average everything that has sold over the entire year. Whereas on this resource, we actually take a look. Okay, these are the exact number of active listings. So between 6.3 and 6.5, that's the range that we're in on months of inventory. 6.3 a little bit more on the conservative side, 6.5 a little bit more on the aggressive side of things. But either way, it's a very tight range. I'm going to go for 6.32. We were at 5.5 in April. Second week of April, we were at 5.5 months of inventory, and we just shot up to 6.32. So we could very well reach that 7-month mark in the next 4 to 6 weeks. When you take a look at the number of active listings versus the pending listings going all the way back to March of 2023, you can see green active and you can see the orange pendings. Pendings now trailing down a little bit, whereas active continues to go up. This is a new record high. We beat the previous record high, which was Friday, and we beat that by 119 new listings. So this is a new record high on the number of active listings currently in the market. We are now noticing that records are being broken every Friday and every Monday. Friday breaks the previous Monday's record. Monday breaks the previous Friday. So you can expect the number of active listings to trail back a little bit because properties went under contract over the weekend. We tend not to see a lot of new listings entering the market Monday, Tuesday, Wednesday. Thursday, we see a lot of listings entering the market. That gets represented on the Friday numbers. And then we have the Friday, Saturday, Sunday new listings that get represented on the Monday numbers. That's why Monday breaks the Friday, but Friday breaks the Monday. And you can see that out of all of the active listings currently in the market, 54.3% of those listings have had a price decrease. Now, let's take a look at some of the price drops because it's really amazing. When you look at all the price drops, and there's that 54.3, 54.28, the average price drop on those 9,634 listings that have had a price drop is $67,000. It's 6.74%. These are active listings with a price drop. So not only are we noticing almost 55% of active listings with a price drop, it is substantial. It's $67,000 average price drop. Now, everything is relative to the price point of that city and also that zip code. Some cities like Dripping Springs, average price drop $100,000. Del Valley, $27,000. But look at the percentage, still a 6.2% price drop. So we are noticing a lot of price drops out there. This week, you're going to get the top 100 opportunities, either this week or beginning of next week, so that you can share that with your clients. Let's take a look at activity index, see what is going on across municipalities and also zip codes. I love this resource. This is probably one of my favorite resources that we publish. This is where we take the activity index for new construction in months of inventory. We compare that with the activity index for resale along with months of inventory. If the months of inventory on resale is bold, that means that it's over double. If you see it where it's bold, that means that the resale inventory is more than double the new construction inventory. And then you can see the months of inventory versus new construction. In the city of Austin, the resale market has less inventory than the new construction market. But you look at some of the other municipalities, and I really want to take a look at Del Valley, where Del Valley, the new construction market has 1.96 months of inventory. The resale market has 12. The resale market has 513.3% more inventory than the new construction market. Bottom line, the resale market simply cannot compete with the new construction market. The reason this is important is because you're going to listing presentations in Del Valley where they bought the house in 2022, 2023. And this is an excellent resource that you can share with that seller, that if you are competing with a new construction market, that buyer is shopping PITI, principal, interest, taxes, and insurance. and you're going to have a very difficult time competing with that market. Let's take a look at new highs and new lows. When you look at activity index, City of Austin just reached a 12-month low on activity index. So did Del Valley. Same thing with Georgetown. Georgetown dropped down to 21.7% activity index. I don't see any new highs. I see mostly new lows. Lakeway, 12-month low. Leander, 12-month low. Lockhart. And we've got Pflugerville also at 24.5%. We've got Smithville, 6.9%. And those are going to be the lows on activity index. Let's take a look at months of inventory. Any new lows or new highs? Some of them are doing well. City of Austin stabilizing a little bit on months of inventory. We've got Dale still sticking it to the 11 plus months of inventory. We've got Lakeway. Lakeway just reached a new high. Same thing with Leander. Inventory in Leander exploded. We were at 3.02 months of inventory in December. We're at 6.35 in the city of Leander. That's going to be a record high. Marble Falls, 11 plus. Spicewood, 11 plus. And it doesn't look like we have any record lows. Even though Wimberley is doing very well, we did have a record low last month. A little bit of an increase in inventory in Wimberley this month, but still, when you look at the past 12 months, it's actually doing fairly well. And here we've got the top performing cities and the bottom performing cities. We've got Buda, Hutto, Kyle. All of them, Buda, Hutto, Kyle, Gerald. All of them over 30% activity index, doing very well. That is both new construction and resale, but we all know the reason why it's so high is because of new construction. Melanie, you're absolutely right. That is why the activity index is so high, but that's where you can go back and you can compare the overall activity index to the breakdown. What is new construction? What is resale? Let's take a look at the price range breakdown, and let's take a look at which price ranges are outperforming other price ranges, because the difference can be drastic. Take a look at Hutto. Nothing happens in Hutto over $600,000. You've got 1.6 months of inventory between 2 and 300,000. 2.7 between 3 and 4, 5.2 between 4 and 5, 7.5 between 5 and 6, and then 45 months of inventory between 6 and 7. Really interesting to look at it this way. If you are in Marble Falls and you're at the over $1 million price point, we're looking at 126 months of inventory. Unlimited. You've got unlimited inventory. If you've got a buyer looking at over $1 million in Marble Falls, they can choose whatever they want. 126 months of inventory. Really amazing. Let's take a look at zip codes, and let's take a look at new lows and new highs on zip code. But also, let's take a look at, let's just do the new lows and new highs. Let's see if we can find any new highs. On the low side of things, we've got 02. That reached a low. 05, 17. I am really surprised to see 17 here. November of 2024, we had 40% activity index, meaning 40% out of anything that could be under contract was under contract. That's really hot. That is now down less than 50. I mean, it's down cut by half. 19.5% activity index. That is a big change. So things are slowing down in 17. Be on the lookout for that. Let's take a look at a few lows. Oh, wow, you're right. Take a look at 29. From 44.4, 44.6, and it just stops. Goes down to 21.6. 2.7, that now is a record low. 2.3 is a record low. I'm not seeing any new record highs here. That's more reserved for the November, December, January timeframe. We do have 4.5 at 14.1. We've got 4.7 at 18. 3.9. 3.9 has slowed down quite a bit. We've got a drop in demand by 50% in the 3.9. That's been the number one zip code for the entire Austin area for months and months. That reached 58.1% activity index in January. That is now cut by half. And let's see what else. We've got 5.4. That's at 16%. Del Valley, there's at 26.6. Lago Vista at 8.8. Let's take a look at Cedar Park. Cedar Park's not doing bad at 25.1. That is not a record low. The record low is going to be 21.2 in August. We're at 25.1, but we were at 27.8 June of 2024. So we are slightly under June 2024, not a record low, but it is a little bit better than last month at 24.1. Pflugerville, on the other hand, that reached 24.4 activity index. Georgetown, amazing what's going on in Georgetown. Both zip codes in Georgetown, big drop here over the past 60 days in Georgetown. A lot of new listings. It's going to increase the active listings, and then you've got pendings are not keeping up, so therefore the activity index is going to go down. Pending divided by active plus pending. Leander at 20.2%. Round Rock, that is somewhat surprising just to see such a dramatic drop in Round Rock. February, 32.1% activity index, down to 17.8% activity index. So you can see what's going on, that it's really across the board. A lot of zip codes are experiencing higher months of inventory, slower activity index. We can see that across the board. Even new construction is experiencing a pullback. More inventory, higher inventory. We had a better activity index on new construction just 2 months ago. So across the board, there is just a slowdown going on the number of pending properties. Let's take a look at the price breakdown. And we've got 5.1, $200,000 to $300,000 in a 78751, 48 months of inventory. 5.2 between the $500,000 and $600,000 range, 36 months of inventory. Which one is going to be the highest one? What's the highest one? Let's see if we can find in the zip code range the highest inventory. We've got 48, we've got 45, we've got 57. Marble Falls. There you go. Marble Falls, 57. That's this specific zip code in Marble Falls. That's why the number is different. It's that specific zip code. 57 months of inventory. Let's take a look at type of market. Out of the 30 cities that we track, 11 out of the 30 are still in a seller's market, 37%. 12 out of the 30 in a neutral market, that's going to be 40%. 7 in a buyer's market at 23%. Let's take a look at the cities that are really close to transitioning one way or the other way. We've got Cedar Creek and Wimberley. Or actually, Cedar Creek is now 7.9, so that is a buyer's market. We've got Wimberley and Lakeway, very, very close to transitioning into a buyer's market. Manor is now in a neutral market. Georgetown, very close to transitioning into a neutral market. Now, what about zip codes? Out of the 75 zip codes that we track, 36 or 48% are still in a seller's market. 18 or 24% in a neutral market, and 21 zip codes or 28% in a buyer's market. Let's take a look at which zip codes are really close to transitioning. We've got Wimberley at 6.98 months of inventory, 78676. That is very close to transitioning into a buyer's market. And same thing with 78735. I'm not going to count Manchac. That's a little bit big of a gap right there. Now let's take a look at which zip codes are very close to a neutral market. We have San Marcos, 78738, and I'm going to stop at 4.8. So we've got Driftwood, 78619, 78725, 78745, 78738 in San Marcos. Very close, I would say weeks away from transitioning into a neutral market. The rest of the zip codes are going to be safe. The number one performing zip code is going to be Buda when you look at months of inventory at only 2.95 months of inventory. Same thing with Hutto at 3.14, doing very well. Now, when you look at the percentage difference year over year and year to date, we've got year over year Manchac number one at 107%. Bottom of the list, we've got Wimberley at an 18.1% drop in months of inventory year over year. Year to date, boy, Marble Falls, 120% increase in inventory year to date. Hutto, a massive drop of 35.3% months of inventory. Year to date, Hutto is doing better than any other municipality. We have 6 out of the 30 have experienced a drop in months of inventory compared to year to date, and that's going to be Elgin, Wimberley, Buda, Lago Vista, Del Valle, and Hutto. All experience a drop in inventory year to date, and then you've got the rest where we've noticed an increase in inventory. On the zip code side of things, 78739 continues to lead the pack on the year-to-date increase in inventory at a amazing and impressive 275% increase in inventory in the 78739. And we've got the 495336, 61233, all over 100% increase in inventory. On the bottom of the list, we've got quite a few zip codes experiencing a drop in inventory. Bertram, Hutto, Driftwood, Buda, down 33%. You can find all this information on teamprice.com, insight and statistics, months of inventory. All this information is there. Let's take a look at the percentage of properties that are selling over list price, at list price, under list price. The average sold price so far this month, $609,410. I'll show you here shortly how that compares with some of the previous months. $465 median, 66.4% sold under list price, a little bit more than the previous 2 months. They tied at 62.8. 21.3 sold at list price, and 12.3 sold over list price. That's going to be the lowest number going back to February of 2025. And we've got a lower, if you take a look at, let's take a look at over list, 12.3. 12.3% of properties selling over list price is going to be the lowest June going all the way back to 2011 on the number of properties that sold under list price. Our forecast is that 2,696 properties will sell this month. That would give us a 11.4% month over month drop. Statistically, going all the way back to the year 2000, 17 Junes have experienced a month over month gain. 9 have experienced a month over month drop. We've been experiencing a month over month drop going all the way back to 2022. Nothing in the forecast indicates that this is going to reverse this year. Nothing. I expect this to reverse in 2 years. I'd say we're going to be very low single digit next year. Next year, low single digit. Right now, we're double digit. 2024 month over month, drop of 11.7. Our forecast this month, drop of 11.4. Next year, I expect there to be a drop into the low single digit, maybe 1 to 3%. 2027, I expect there to be an increase. We're going to hit the low, and then we're going to have the month over month increase. Year over year, over the past 25 years, 13 have been positive, 12 have been negative. I expect there to be a year over year increase in 2027, guaranteed 2028, not 2025. I don't think 2026, but into 2027. So when you take a look at the number of sold properties, we are down 5.3% year over year. All of these dots are previous Junes going all the way back to the year 2000. You can see that we're expecting a 5.3% year over year drop. It peaked back in 2021. I'd say we have another year or two before it bottoms out, and then we can start expecting that reversal. On the cumulative side of things, we are expecting a 7.2% year over year drop on the cumulative when you add everything that's sold from January to June. Well, how does this compare to the number of realtors and what is selling based on the number of realtors? As of this morning, there are 18,486 realtors within our MLS. That is a drop of 13.11%. You can see that this is now the third June year over year where the number of realtors is dropping. We peaked September 2022 at 21,276. We're currently at 18,486 realtors. When you take a look at the number of realtors, this is going to be the blue line. The number of sales, this is going to be the red line. The number of realtors always peaks about 24 months after the transactions peak. It happened back here. Let's go ahead and just start marking this. Transactions peaked, agents peaked. Transactions peaked, realtors peak. The good news is that as the market starts improving, the number of realtors continues to go down for the same amount of time, about 18 to 24 months. So what happens in this beautiful, when these two collide? Number of sales are going up, realtors are still going down. The ones that are left reap the spoils of war. That is what happens. And you can see that the single best month going back 25 years, when you look at the number of transactions per the number of agents, per 1,000 agents, was July of 2013. Because sales are going up, market is recovering, agent count is still going down, those two collide. The agents that are left reap the spoils of war. That is what's going on. But right now, we have to deal with the reality of the market, and we are expecting 146 properties to sell per 1,000 realtors. That is going to tie 2024, June of 2024, at also 146. And that is going to be, well, it's going to be tied. So there you have it, 146, 146. That is going to put us in the worst June on record, tied to the worst June on record, which was June of last year. On the cumulative side of things, we're looking at the second worst year on record at 798 sold per 1,000 realtors. That is slightly over 2009 at 765. I would say we have another year or so left. I would not be surprised if last year wasn't either almost exactly like, if next year wasn't exactly like this year, or even a little bit more pressure on the market. I would not be surprised. That's what I'm expecting. That's what the data is forecasting when we look at our inventory stress analysis or market health index. Those are 18-month leading market indicators, and we're not noticing an improvement on those. And that does tend to forecast the market by 18 months. So I'm not noticing those numbers going up dramatically right now, so I can't possibly forecast a better 2026. This is at the macro level. This has nothing to do with you personally. This is at the macro level. Always keep that in mind. But these are the numbers that we're noticing right now. Like you have to defy the market. Like your personal book of business has to defy the market. It has to be antithetical to the market. You have to have that mindset. There's no other way but to have that mindset. What's happening with pricing? We are up, of course, $23,730 month over month. We are up $23,730. Even though we've got record high number of active listings, a pullback on the activity index, the folks that are buying more expensive homes. That is what's going on. On the median side of things, we are up $20,000 month over month. Now, keep in mind, it is the 16th of the month, and more expensive homes tend to sell in the first 15 days of the month. Less expensive homes tend to sell in the latter 15 days of the month. This number could retract really fast. That is exactly what happened last month. When we take a look at the video go backwards in time, go take a look at the Monday morning touch point from, the second week of May. And what did we notice? Well, this number month over month was up like $30,000. Where did we end? Up $919. So the fact that we're up $23,000 means that this time next month, when we are revisiting these figures, we could be negative $2,000. You have to keep that in mind. As properties close, if cheaper homes start closing, and that's a statistical fact, that number is going to drop really fast. We are already seeing the number drop. We're just going to have to keep on updating this information daily, weekly, reviewing it weekly to see how fast the number is going to drop. But we do know that the number is going to drop. And take a look at the median side of it last month, where we were positive by quite a bit, and we actually ended the median down by 0.4. The sold to list price ratio at 97.38. Let's take a look at a few other figures right here. You take a look at the median sold price at $465. We are still down right around the 15.45% from the market peak, which was May of 2022. So if for some reason my forecast is wrong and today is the absolute bottom of the market, and it only improves from this moment forward, we can expect a return to peak using the 25-year compound market appreciation of 5.118% to be December of 2028. It will take 43 months for us to return to peak value. So when you've got that client that says, well, let me just go ahead and just wait, they better wait a long time. The markets don't reach peak value unless you have some insane event like this. And this is classic bubble behavior. Unless you have an event like this, markets don't reach peak value. Could it happen again? I sure hope not. But we can't forecast every aspect of the future. We can apply previous historical context to limited forecasting. That's what we can do, and that's what we oftentimes will do. When you look at the percentile analysis, the bottom 25th percentile as opposed to the top 25th percentile, even though sales are down 14.5%, we can see that the bottom 25th percentile on the overall price, it is down 3.2%. On the price per foot, it's down 3.8%. On the top 25th percentile, the price is down by 0.8%. So we continue to notice the trend where the top 25th percentile is outperforming the bottom 25th percentile. That is the classic definition of a bifurcated market. That is why prices are being held up. It's because of this. That's why we track this. The reason it's important for us to track this is because when you are listing a home in certain zip codes, you have to be obsessed with this Because if I'm listing a home in the 78722 zip code, I know that prices are going to go down in that zip code over the next 30 to 60 days because the top 25th percentile market is underperforming the bottom 25th percentile market. It's going to pull prices down. That is one way for us to look at and forecast what's going to happen to that specific zip code. Another good way for us to do that is by going to Insight and Statistics and going on the price per foot analysis. Because one of the things that we do on that price per foot analysis is we take a look at the pending price per foot, the median price per foot, and we compare that to the sold price per foot. And if you've got an area with a really, really high number difference like Lakeway, the pending price per foot is down 9.1% compared to the sold price per foot. So what's going to happen to the sold price in the next 30 to 45 days? It's going to go down. We've got a comment right here. So it sounds like the top 25th heavily influenced the bottom. I wouldn't say that it's heavily influences the bottom. It heavily influences the overall, not the bottom. You have to separate those two markets into two completely different, distinctive markets. What it does is it heavily influences the overall price. You've got the overall price, $465,000. That's going to be the median sold price. Out of that $465,000 median sold price, what's the breakdown? What's the top 25th, meaning 25% sold over this amount? What's the bottom 25th percent? If the top 25th percentile is up 3%, well, the bottom 25th percentile can be down by 5%, and prices will still go up at the macro level. Once the top 25th percentile now is going down in price, now prices are going to go down. If the top 25th percentile, if the year-over-year price drop is over that of the bottom 25th percentile year over year, that means that prices are going to go down fast at an accelerated rate. I can guarantee that that city, that zip code, that municipality is going to have a drop in price year over year because that top 25th percentile is now going down. And the reason why is a 3% price drop on a $400,000 property is $12,000. A 3% price drop on an $800,000 property is double that. It's $24,000. That's why it's so significant, because that raw number is going to be so much higher. It's going to affect that average price way more. That's where we see the average price just really plummet, is because that top 25th percentile is so significant. It carries so much weight. So it doesn't influence the bottom, it influences the entire number. Does that make sense? Okay, good stuff. Let's look at a few more things. Let's take a look at rates, and then we are going to call it a day. We're going to keep this at exactly 1 hour. So let's take a look at interest rates. We are at 6.875 right now. We had a really good start of the week last year. We lost a little bit of that momentum on Thursday and Friday. This week is going to be a very important week for the bond market. Let's start with this morning. We had the New York and Power State Manufacturing Index borderline collapse, down 16. The forecast was down 5.9. We had fairly good bond auction on the 3-month bond auction. That came in a little bit better than expected compared to the previous. A little bit higher than expected on the 6-month, not by much. We do have a 20-year auction that's going to be very significant at noon today. But tomorrow, we've got some inflation numbers being expressed in the import and export price index. That communicates inflation. Are prices going up or down? I love this number. As a matter of fact, I trust this number more than CPI and PPI. And the reason why is CPI is heavily influenced by owner's rent equivalent, hedonic adjustment, substitution, not import and export pricing. That's a raw number. That is the apples to apples comparison. So I like the import export pricing way better than I like CPI, PPI. I cannot wait for this number to be published tomorrow at 7:30 a.m. We've got a lot of manufacturing data. We've got Atlanta Fed. We've got the National Association of Home Builder Housing Market Index. They are going to publish that tomorrow at 9 a.m. Once they publish that, we're going to be able to publish our pending home sale resource along with our traffic of prospective buyers on new construction. Those two are available under Insight and Statistics. That's going to be published tomorrow at 9 a.m. We've got building permits, housing starts, and we've got the interest rate decision. No one is expecting the Fed to lower rates. No one. I'm not expecting them to lower rates. I don't think they're going to lower rates at all. So we're expecting 4.5. We're expecting them to hold firm. They could very well lower rates come September, but none of us are expecting that they will lower rates right now. And then we have on Thursday some job information, and we've got a lot of commodity data, some additional employment data, Philadelphia market, that entire region, manufacturing, along with business conditions. So it's a significant week when it comes to the bond market. We don't know what the Fed is going to do. There's a 99% chance that they're going to hold it firm at 4.5%. But you can expect a fairly erratic bond market this week, especially with all of the national and global news going on between Israel and Iran. And you've got, of course, what's happening with Ukraine. And I mean, there's so much going on in the world right now. And of course, that does affect the bond market. And we're just going to keep tracking it on a daily basis. But as of now, we are at 6.875. Y'all, it is 11:02 right now, and that does conclude our new listing to pending ratio inventory overview. Really quick summary. What does this mean for all of us? New record highs on active listings on the market. Buyers are going to continue to have more options right now, more price drops. Sellers have to be very cautious with the amount of new inventory entering the market. In the slowdown in buyer demand, sellers are going to have to be a little bit more assertive, aggressive when they're pricing their properties. Price drops, staying ahead of the market. But that is your Monday morning touch point. If you have any questions, comments, concerns, criticisms, complaints, please let me know. Here to help. Otherwise, I will see you later. This will be posted here shortly. Take a look at everything. If you have any questions, let me know. Here to help. Otherwise, have an amazing rest of your Monday, and I will see you Wednesday for our broker Q&A over Zoom and our training and our contract review. Have an amazing rest of your day. If you have any questions, let me know. Here to help.